What's up, yo? This is Sunko, the Korean bro. Today is 2022, mm, September, October, November, December, October 7th. Let's see. What articles do we have tonight? Okay, three stocks with market beating price performance. Hmm. Conagra brand is a value pick for income investors. U.S. hiring stayed solid in September as employed at 263,000. Stocks open lower on concerns the Fed will keep rates high. Okay. U.S. future mixed ahead of U.S. employment update. EU leaders struggle to bridge gas price cap divide. CVS Medicare Advantage business takes quality rating hit. Lucid Motors may test investors' resolve, but should they sell? U.S. employment kept hiring solidly in September, adding 263,000 jobs despite surging interest rates driven by Fed. Bosch Inc. stock on track to become a quarter fourth winner. Is Ford's revenue enough to juice its stock price? Will WWE shares wrestle their way higher or will they tap out? Hmm. Three stocks growing their businesses for 2023. Okay. First, three stocks with market beating price for performance. Digi International boosts accelerating earnings growth and strong price action in 2022. Lamb Weston has been trouncing earnings view. Analysts see double-digit earnings growth for the next 2 years. Wingstop is expected to post earnings and revenue growth when the company reports later this month. Caps, Digi International, Lamb Weston Holdings, and Wingstop all climbed higher recently in heavy trading volume, even as the broader market reversed lower. As a whole, caps have been slightly outperforming the S&P 500. The SPDR S&P MidCap 400 ETF is up 5.53% so far this week, while its large cap counterpart, the SPDR S&P 500 ETF, is up 4.48%. Digi International advanced to 2.34% in nearly triple average turnover Wednesday, tacking on gains to its recent outperformance, which include gain of Digi International, Lamb Weston. Lamb Weston is in the decidedly unglamorous business of producing, packaging, and distributing frozen potato products to restaurants, as well as via private label brands for consumers. But potatoes are apparently in high demand. Okay, potato company, Lamb Weston. And what else do we have? Mm, let's see. Lamb Weston, Digi International. Okay. What does this company do? The Minnesota. Okay, here it is. The Minnesota-based company specializes in the Internet of Things, which involves connecting products, apps, and services through various wireless devices. Those devices can include factory and industrial settings, household applications such as appliances and security systems, and automotive gear, among many other examples. Okay, DG International, DG DG International. Okay, let's see. Oh, here it is. It's also listed as one of the stock that you should have. Textile holding begins after strong earnings report. Is on the move. Here's why the trend could be sustainable. Hmm. 10 best performing tech stocks of 2022. Okay, let's look at profile. Currently, 659 employees are working at this company, dg.com. Its domain is dg.com. I guess it's all about IoT. Hmm. Its headquarters is located at Minneapolis and business mission critical Internet of Things product services solution in the United States and internationally. The company operates in two segments: IoT products, services, and IoT solutions. It offers cellular routers for mission critical wireless connectivity, cellular modules to embed cellular communication abilities into the products to deploy, manage intelligence, and secure cellular connected products. Console service to provide secure and remote access to network equipment in data centers and edge locations. Also, radio frequency products. Okay. Oh, things like that. Okay. Yeah. Mm. Okay, I get it. I get it. And what else do we have? Congra. The name of the company is a Conagra brand is a value pick for income investors. Is a deep value compared to its peers, and it pays a high yielding dividend. The company just reported a strong quarter and issued a favorable guidance. The analyst sentiment in the stock is warming. Okay, has been a value pick for income investors for some time now, and never has that been more true. The company is proving why the consumer staples are where risk averse investors want to be by outperforming on the top and bottom lines and providing favorable guidance. The best news coming out of the quarter first report, however, is that share prices fell nearly 4.0% despite the good news and are back within a range that has been a buying zone for institutional investors for the last 18 months or so. The institutions own about 84% of the stock at this time, and it looks like that figure could grow. In regard to the value, the stock trades at only 13 times its earnings while paying a safe 3.9% yield, which is among the best value combinations in the sector. Okay, I get it. Conagra brand. Mainly, especially in recession, experts say that it's good for you to have a stable brand because it's a risk averse. Um, this is also like that kind of company that you could have possibly for a risk averse uh purpose, but I'm not like that, so just skip on this one. And next article we have is about employment. um America's employers slowed their hiring in September but still added 263,000 jobs, a solid figure that will likely keep the Federal Reserve on pace to keep raising interest rates aggressively. So here it is. Interest rates um goes up, mm, and company uh will mm, lay off workers because they got no not much money to invest. So they will just um make a choice, and the choice that they would make is mm, lay off some workers. But like unlike uh the trend, 263,000 jobs are added this month. So Fed will be happy with keeping interest rate hike. Mm. They will keep the pace of interest rate hike, right? Because already unlike what they had expected, it's going up. I mean, employment is going up, so A solid figure that they will likely keep the Federal Reserve on pace to keep raising interest rates aggressively to fight persistently high inflation. Yeah, that's what it is. So Friday's government report showed that hiring fell from 315,000 in August, marking the weakest gain since April 2021. The unemployment rate fell from 3.7% to 3.5%, matching a half century low. Okay. The Fed is hoping that slower job growth would mean less pressure on employers to raise pay and pass those costs on to their customers through price increases. Mhm. A recipe for high inflation. But September's hiring, hoping the slower job growth. Slower job growth. So Fed was expecting to have slower growth, which means they were expecting to um, let companies hire less people and pass that pressure on to customer instead. Hmm. That's what it is, isn't it? Right? Hoping that slower job growth will mean less pressure on employers to raise pay and pass those costs on to their customers through price increases, a recipe for high inflation. But September's hiring is slightly stronger than economists had expected, might not have slowed enough to satisfy the central bank's inflation fighters. Hourly wage rose 5% from a year earlier, the slowest year-over-year pace since December, but still harder than the Fed would want. The proportion of Americans who either have a job or are looking for one slipped slightly, a disappointment for those who hoping that more people would enter the labor force and help ease worker shortages and upward pressure on wages. A moderation in job and wage growth will be welcome developments for Fed officials. But still, she doesn't expect the softer jobs and wage numbers to keep the Fed from raising its benchmark short-term rate by sizable three-quarters of a point in November and by a half point in December. Uh, anyway, the point is, um, unlike what Fed had expected, um, employment employment employers added 263,000 jobs this month. Oh. That's what it is. Stocks open lower on concerns the Fed will keep rates high. Hmm. Okay, stocks open lower on concerns the Fed will keep rates high. Good news on the economy, still bad news for Wall Street. Okay, stocks are falling. Um, in the early going Friday, after report on the U.S. jobs market came in stronger than expected. Okay. Raising concerns that the Federal Reserve will have no choice but continue to aggressive efforts to slow the economy with high interest rates. Okay, because mm, mm, mm. The bitter medicine it is using to fight inflation. The worry is that the economy will slow down so much it will enter a recession, putting people out of work and knocking down company profits. The S&P fell 1.6% and the Dow fell 1.2%. This is a breaking news update. AP's earlier story follows below. Wall Street shifted between small gains as losses early Friday with all eyes on the release of U.S. employment data that could affect decisions by the Federal Reserve as it attempts to curb inflation through interest rate hikes. So, um, there's like an announcement about employment thingy, and obviously the results uh has affected stock market greatly because unemployment rate uh went down because more people are now hired, more people can get to have chances to work. Uh, so Fed will have interest rate hike, right? And which means company will have less money to invest. Uh, so which means slower economy, right? Anyway, mm, that's the like the connection pattern we have. Next one we have is the U.S. futures mixed ahead of U.S. unemployment employment update. That's what I read last time. EU leaders struggle to bridge gas price cap divide. European Union leaders struggled Friday to bridge significant differences over a natural gas price cap as winter approaches and Russia's war in Ukraine fuels a major energy crisis. European Union leaders struggled Friday to bridge significant differences over a natural gas price cap as winter approaches and Russia's war in Ukraine fuels a major energy crisis, driving up prices for consumers and businesses. The price cap is one of several measures. Hmm. Price cap. Price cap. Here it is. Natural gas price cap is an issue among EU leaders mm, because of conflict and like energy crisis. It's having a big impact on customers and big businesses. The 27 nation bloc is preparing to contain an energy crisis in Europe that some fear could lead to rolling blackouts, factory shutdowns, and a deep recession over the winter. And economy is already weakened by the coronavirus pandemic. Russia has reduced or cut off natural gas supplies to 13 EU member nations as European government bolster their support for Ukraine in the form of weapons, money, aid, and sanctions on Moscow. The potential for a shortage has led to surging gas, electricity prices that could climb higher as demand peaks during the cold month. Standing in the way of an agreement was the simple fact that each member country depends on different energy sources and suppliers, and they're struggling to see eye to eye on the best way ahead. So obviously, European countries are struggling to get energy sources because Russia has cut um, sources that goes into European countries because here in the article like 13 or a few countries uh, officially announced that they will support Ukraine uh, in this war period. So. Hmm. Lucid Motors may test investor resolve, but should they sell? Lucid Motors stock remains significantly below its 52-week highs as analysts factor in macroeconomic concerns. Consumer demand for electric vehicles is rising, but so are interest rates, which will increase the cost of capital. Which comes first, electric vehicle demand or public charging infrastructure? Investing in Lucid stock will require conviction and potentially years of patience. Potentially years of patience. Years of patience, conviction is needed. Okay. U.S. employers capped hiring solidly in September, adding 263,000 jobs despite surging interest rates driven by Fed. Yeah, right. Mm. Three stocks grow their business for 2023. So now let's go over to Yahoo Finance. What articles do we have tonight? U.S. payrolls grew by 263K. Unemployment rate falls to 3.5%. Hmm. Stock sink. Treasury yield spike following September jobs report. Treasury yield. Take opportunities on days like today. Mary Callahan Aldo says now could be the best time to invest. Your three stocks to give these two strong buy stocks his stamp of approval. Long-term investors should absolutely buy now, says Jeremy Sigel. While the world-renowned Walton professor sees action, AMD's revenue misses by a mile. The stock is falling. Five stocks to avoid like the plague when the recession starts. Don't like Jim Cramer stock coach. This ETF bids against Mad Money host. Inflation is going to fall just as fast as it rose. And that's investors' cue to enter the stock market. AMD and Samsung say no more economic gloom. What it means for earnings season. Remarkable reversal. President Biden just scaled back student loan forgiveness, and the change could impact up to 1.5. Hmm. Okay, let's read these articles first. Hmm. Now we have U.S. economy adds 263,000 jobs in September. Unemployment rate falls 3.0. Job growth slowed for a second month in September. The series of supersized interest rate hikes permitted in the U.S. economy, but the softer non-farm payroll gain is still unlikely to deter policymakers from aggressive monetary action to fight inflation that remains at a decade's high. Here are highlights from the latest monthly jobs report released by the Labor Department on Friday, compared to consensus estimate from Bloomberg. Hmm. Treasury yield spike. Treasury yield spike. Stocks tumbled at the start of trading Friday as Wall Street weighed the government's monthly employment report, showed a slowdown in September hiring the still robust labor market. The U.S. economy added 263,000 jobs last month as the employment rate fell to 3.5%. Economists expected a payroll gain of 255,000 and for unemployment to hold at 3.7%. Hmm. The market's negative reaction may be a sign that investors are processing the likelihood that there will be no change in the Fed's aggressive playbook in the near term. Mike Loganwood, head of model portfolio construction, Morgan Stanley's Global Investment Office, said in a note, keep in mind the next Fed decision isn't until early November, so much more data will need to be digested. Not the least of which is next week's inflation gauge. Hmm. Hmm. GXO Logistics will start on the supply side, where GXO is a mid-cap player in the global contract logistics niche, providing supply chain and warehousing services. Sociedade Química Mineral de Chile. Okay. With the Dow, the S&P 500 and also all deep in the red year to date, all deep. It might be tempting to hit the sell button and get out of this ugly market completely, but a prominent economist suggests otherwise. If you're a long-term investor, I would actually buy now. Professor of finance at the Wharton School of Business tells us him, these are absolutely great long-term values. Um, One of the reasons behind this year's stock market slump is inflation. Consumer prices were rising at their fastest pace in 40 years. Uh, While the headline CPI number has cooled off a bit recently, August inflation rate was 8.3% year over year. It's still worryingly high. To tame inflation, the Fed is raising interest rates aggressively. The central bank increased its benchmark interest rates by 75 basis points last month, marking the third such hike in a row. If rampant inflation continues, more rate hikes could be on the way. Hmm. And that does not bode well for stocks. Siegel points to one segment of inflation that is cooling down housing, but that isn't properly reflected in the index numbers. We pointed out that the way these indices are constructed, the housing costs are very lagged, and they're going to continue to go up, even though, as we saw the case Caesar Housing Index, the National Housing Index, housing prices are going down. He says, excellent value. Okay. No lost decade. Could be flat for next decade. Hmm. Okay, let's go to the next article. Okay. Hmm. Five stocks to avoid, like the plug when the recession starts. Five stocks that you have to avoid. Hmm. Boeing, Baker Hughes, Halliburton. None of them are on my portfolio. Next. Inflation is going to fall just as fast as it rose, and the investors are queued and enter the stock market. That's like the queue. Okay. What was it again? Inflation going to fall just as fast as it rose, and as investors queue to enter the stock market. That's like queue. It's going to fall as fast as it rose. It is going to fall. That's like an investor's queue to enter the stock market. Okay. Come on, I cannot read it again. Okay, what is this? AMD and Samsung say in a more economic gloom what it means for earnings season. Okay, the semiconductor industry is the latest sector to spook investors with warnings over slowing demand and the impact of an economic downturn. They won't be the last. The warning signals have been there for weeks, with the likes of Nvidia, Samsung, and Intel dropping hints. Advanced micro devices compounded that Thursday, sending revenue more than $1 billion below its previous forecast in the third quarter, citing weak PC demand that sparked concerns, but Samsung Electronics updated guidance overnight has exacerbated the fears. Security software stocks should thrive even in downturn. Okay, let's read this one. Hopefully. Okay. It's one last article that I'm going to read. I'm so hella tired tonight. Um, it's 11:52. So okay, let's see. While there are growing concerns on Wall Street that corporate technology spending could be collapsed by slowing global economies, there is reason to think cybersecurity should be resistant to budget cuts. At least that is the view of Evercore ISI analyst Peter Levin, who this morning picked up coverage of the group with a generally bullish tone. Levin makes his view clear in the headline of his report. There are three things in life that are certain: death, taxes, and cybercrime. Concede that the sector is recession proof. He finds a unique set of industry specific dynamics not present in any other subsector of tech. Some would think, given how strategic maintaining a strong security posture in a remote cloud first world has become. Zscaler, Palo Alto Networks, Okta, CrowdStrike Holdings. Okay, this is it for today, and I'm gonna see you tomorrow. Okay, see you tomorrow or the day after tomorrow. Okay, bye bye.